Hey everyone, welcome back to POA for you. My name is Leroy, and today we're going to go through the N Levels 2018 Paper 2 Question 1. Since 2021, Paper 2, the syllabus has changed, but for Paper 2 Question 1, it will still be a very relevant exercise for you guys to do for papers prior to 2021, and I'll show you how the syllabus change will impact the answers, the way you answer the question, and hope that's helpful for you. Now, if you think that another friend of yours could benefit from this YouTube video, please share it with them. I think this is a free resource that I want to reach as many people as possible, and hopefully will be helpful for you and your friends. If you guys have any questions throughout this video or any videos that I have, please ask me in this channel or send it to me via email at poa4u@gmail.com. My email address is always on the top left hand corner of the sheets I work on. Alright, so without further ado, let's get right on to this. So this question typically comes with a trial balance, and then it has some additional information, and you're supposed to have two outputs. One, the statement of or the income statement. Currently it's known as the statement of financial performance, and the balance sheet. Currently it's known as the statement of financial position. So that's the first impact on the new syllabus. So it's so three steps that you need to do as a foundation before you attempt to do the statement of financial performance and statement of financial position. The first step, when you look at this trial balance, go and determine whether each of these items will be in the income statement or the statement of financial performance or statement of financial position, right? So let's go one by one. And statement of financial performance, as a recap, will have things like revenues, income, and expenses. Three buckets, three items, that's it. And statement of financial position, historically known as the balance sheet, will have assets, liabilities, and equity items, right? So capital, drawings, these are equity items. Okay, so let's go one by one. Motor vehicles and assets, so it goes to B. Fixtures and fittings, accumulated depreciation are asset related. Inventories, asset, all these are assets, yeah. And then trade payables is a liability. Drawings, these are equity related. Capital is equity. And sales revenues, it's a revenue, sales, these are all cost of sales, expense, the direct expense of the goods that you sell. Discount received as an income. Motor vehicles, expense. Allowance for impairment on trade receivables. This is a performance item, statement of financial performance item. And wages and salaries and rental. Alright, this allowance for impairment of trade receivable will always be tagged along together with the trade receivables, and later I'll show you how you do that. Okay, so that's the first step. Of course, in some questions you would have these trial balance more jumbled up. Here, I think the examiner has done a bit of a trick by putting the allowance for impairment amongst all the other statement of financial performance items, but then they slipped in a statement of financial position items. So thank goodness we caught that. Okay, the next step is to look at this additional information section, and we go into journal entries. Okay, so motor vehicle expenses, prepaid insurance includes a prepaid insurance. So out of this motor vehicle expense of 9,000 plus, includes a prepayment of 375. So prepayment is an asset, right? And when you are recording a prepayment, an asset is debit in nature, so you want to increase that asset to record this prepaid motor MV expense, right? And I'm going to call this 375, and then I'm going to credit. I'm going to reduce because I want to reduce this number because I want to take away the prepayment. So I'm going to credit MV expense because expenses are debit in nature. So if I want to reduce it, I'll credit it 375. So that's the first journal entry. The second one, general expenses owing, were $210. So out of this general expenses that's recorded here, you still owe $210, right? That's not been recorded. So you need to increase this general expenses. That's the first thing, right? So you debit general expenses 210 and credit you're still owing, so that crystallizes a liability. Liability is credit in nature, so if you want to increase a liability, you credit the general expense payables, all right, as a liability. The next thing, allowance for impairment on loss on trade receivables is to be 1,389. So right now it's 937. Now this allowance is a credit in nature item. So if you want to increase it to 139, first step is to credit allowance for impairment of trade receivables, right? And how much do you credit this? You credit this by the difference. You want it to be 1389, and right now it is 937, so you credit it by 452, and then this 452 will be added to this 937, and it will be a final balance of 1389. Now what do you debit? So for this kind of allowance for impairment entries, when you credit this account, you always debit to impairment loss on trade receivables. All right, it's a standard entry, so remember that, memorize it. And conversely, if you debit the allowance account, then you credit the impairment loss on trade receivables. Okay, so this set of double entry is always standard, so remember this and you'll be fine with this kind of additional information. Motor vehicles depreciation at 20%, straight line method. So depreciation, also there's a standard journal entry, depreciation expense MV, and credit accumulated depreciation MV. So this is a standard journal entry for depreciation. And how much is it? 20%. Reducing balance would be multiplied by the net book value of the asset, which is defined as the cost of the asset, so 20,000 less accumulated depreciation to date, so 4,000. So this is your formula. All right, net book value is cost, which is 20,000 less accumulated depreciation to date, which is 4,000, multiplied by the rate of 20%. So that's 3,200. Okay. The next one, fixtures and fittings, 15% straight line method. So it's the same journal entries as the motor vehicle one. I will just have to change the name to fixtures and fittings. And then the rates will be 15% multiplied by straight line will be just multiplied by cost. Very straightforward, right? 15,000. Okay, that's it. All right. Then having done this journal entries, the next step is to see how these journal entries impact the balances on the original trial balance. And if there's balances that will be impacted, then we will just update this accordingly. And there will be also new accounts that these journal entries will create. Let's take a look at that. Okay, so the next step is to update the balance in the TBs and mark any I'm going to mark any new items, right? I'm just going to mark any and mark the journal entries, any new JEs, right? Or journal entries with any new accounts. Okay, so I'm going to show you how I do this. So it starts from this prepaid motor vehicle expense. Right, do you see an account that's prepaid motor vehicle expense in the original TB? No, right? So this is a new item. So I'm going to mark it as a new item, put it yellow so that I understand this. And this new item belongs to the statement of financial performance or statement of financial position. Yes, it's an asset, so it belongs to the statement of financial position, and I'm going to put it as B, so that when I answer B, which requires me to plot the balance sheet or the statement of financial position in today's term, then I would bring this balance over. Now, credit motor vehicle expense, I'm going to credit. So credit will reduce the balance, right? So because this is an asset is debit in nature, credit will be minusing 375. Okay, so this is the updated balance. Now, general expense will be equals 11275, and if I'm debiting an expense, I'm adding this, right? And then I will put this as a new item because I'm not seeing this payable, and this go to the statement of financial position as well. Impairment loss on trade receivables. I have allowance for impairment loss, but I don't have the impairment loss on trade receivables account here. So I'm going to put this as a new item, and this will be A, because this belongs to the statement of financial performance. This is actually an expense. And then we have credit allowance for impairment on trade receivables. I have 937 here as the original amount, and remember I said that this is a credit balance item. So if I'm crediting this, then I'm going to add 452, and this becomes 1389. Now if you recall, the allowance is to be 1389, so we are on the right track. Okay, now next thing, depreciation. This is a new item. All right, because I don't see here, I see accumulated depreciation, which is up here, and I'm going to be 4,000. Accumulated depreciation is credit in nature, so if I'm crediting it below there, right, of 3,002, then I'm going to add 3,002 to this final balance, and it becomes 7,002. Similarly, for the ones below, fixtures and fittings, I'm going to add another 2250 to the already 2250 balance, right? And then I'm going to take this and mark it as a new item. I've got to include depreciation expense. Voila, that's it. All right, so those are the three steps that we have to do. Now, in the next video, I will show you how I'm going to move these three steps into the statement of financial performance or statement of financial position. And if you have any questions so far that you can't understand through rewatching this video, then send me an email or write your questions on this channel, and I will be happy to answer them. Okay, if you like this video, give it a thumbs up, and remember to subscribe to this video, to this channel, so that when I have new content, you would get a notification on this if you turn on your notification bell. So please do that. And if you have any question papers that you want me to do for you, I'll be more than happy to do that. So send them to me. Okay? All right. Take care for now, and stay tuned for the next video.